in all assets, whether it be the dollar index, equities, forex, bond market, gold. Like it's moved around a lot. So it would be reasonable for it to want to have some kind of a retracement. I'm not going to be touching anything tomorrow, and I want to more or less encourage my son to try to do nothing as well. And we'll see if there's any action for me on Friday. But the idea of reaching objectives like this, one of the things that I get questioned a lot is when it delivers to what I either call openly or if I have something I've been watching in private and finally delivers, what do we do next? Like if it's on Twitter, okay, or a comment section is open on a video or whatnot, uh, the new trader or the impulsive, impatient trader or would-be trader student, um, they immediately want to ask me, okay, now what? Now what's it going to do? So, and I often wonder if it's somebody just waiting for me to do it wrong so they can say, ha ha, forget the 999 times you just did it right. But though this time here, we get to talk about that. But if it's not that, and I think it's not so much that, I think it's a matter of knowing what to look for next for them is like a dopamine hit for them, okay? Because they probably watched me call something and they didn't trade it, they didn't use it, and then it delivered. So now they're thinking, okay, if he tells me the next one, I'm going to jump on that one. So I always, create a pause, and it used to drive my paid membership students nuts. They would want to know right away what's the next thing. And I would try to condition them to sit still, enjoy the fact that we just outlined the marketplace. We did what everybody else says can't be done. You can't time the market. You can't do any of these. All these things that no one's supposedly able to do. But here we are in our community, and not just in my community. Other people that know how to trade well, they can time the market. But I try to promote the idea of relaxing. Once you get a windfall analysis, pan out for you, and the degree of hundreds of handles and hundreds of pips, like the last couple weeks has delivered, you want to sit still and just take that in. Let it stew on you a little bit. Okay, don't feel like you got to hurry up and jump out there and try to do something, or that you should know what it's going to do next. I'm not convinced that we've made the low, but I do think that a day or two of retracement is absolutely fine. It doesn't mean that the market's going to stop going lower. It doesn't mean that the market has made a bottom. I don't suggest that we've seen any reason to justify that at all. And there's nothing that's favorable going forward that's going to cause the stock market, equities, or anything else to feel like it's a warranted venture to go and start buying. Moved, hopefully, by having a rule-based idea and a plan where once it gets to levels like this, okay, in other words, if you're a forex trader, this is what I'm getting at basically. Whether you're a forex trader or a futures trader or a bond trader or crypto trader, whatever you're trading, once you get to a longer term discount array that you've been bearish and you reach that level, try to avoid the impulse to want to take new shorts down here. Even if it was the drop, and say the bottom falls out tonight or tomorrow and cable goes below 120. I'm not saying it is, but let's just say if it happened, in the beginning you have to be able to let that go and not think that you should have known that, because preparing yourself for times when you don't want to trade, when not to do something, it's more likely that this thing's going to come up and correct a little bit. Look how smooth these highs are over here. See, my eye goes to stuff like that. And it could go up to that, bump above here, and then break lower, have a smaller shift in market structure on the lower time frames, and then resume going lower. Or it could go even higher than that. Or it could just go sideways inside this little shaded area. Either way, the point is this. It's moved a lot. If you've made money or if you haven't banked something here, you should. It doesn't mean close your entire position. It doesn't mean take new shorts on. That's what I'm really getting at. Because we're really, 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 oversold without saying it with the indicators. Because we've moved a great deal and we're inside of a target that I've been calling for, and you now see it. And we went outside of that. See that? All of this price action in here is efficient until we get to here, meaning multiple candles have traded back and forth inside of a predetermined range. And I say predetermined not in a way that I probably shouldn't have said it that way. Think about it like this. I'm not trying to explain what a balanced price range is. Okay, between these two lines here, price has traveled down to this low, up to this high, and where did we spend the majority of the time? In the upper portion of this range. But back and forth, we've worked inside this range, and now we left it and created an imbalance right here. See that? So when and if we ever get back to this time or price, which we did this week here, it's going to take a very significant price run to dig down all through this range of price because it's already went back and forth. There's nothing inefficient in here. That's what I'm getting at. Whereas we have an inefficiency here with the volume imbalance and the fair value gap together combined. It's easy for price up here to truck down into that. I was in Top Steps live stream 2 days ago, and they were talking about what they were looking for, and I said I like this the 610 level on Nasdaq, and that was because S&P has already and had already shown its willingness to want to go down and get into this area. So a six sister theory, which is what I teach too, is because these markets are closely correlated, that means they usually move in tandem, not minute for minute, not every single day, not every single session. Sometimes there's a crack in that correlation, and that in itself is an insight that you can use. But for the perspective of looking at setups that have yet to form, one of the indices, just like one of the currencies, might make a fast run before you get a chance to get a hold of it. No problem. If the other correlated markets or pairs, if you're trading Forex, have yet to meet its respective objectives, and when we get into NASDAQ, I'll show you what I'm referring to specifically, but the S&P had been the laggard. That means it's been the weaker of the two. Remember, all through the beginning of the year, we were calling NASDAQ higher, 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 higher. It was the outperformer to the upside, and it was always delivering on the longs. When the market became bearish collectively, the S&P showed its weakness as the leader to the downside in terms of the speed at which it was reaching for its discount or raise, specifically these areas here. Okay, the inefficiency between that candle's low and this candle's high. And I mentioned whenever there's a volume imbalance there with a inefficiency, you always want to highlight that as well. So include that. Don't just leave it to like this. That's a classic, buy side imbalance, sell side inefficiency. But you have to compensate with this because this is a volume imbalance in and of itself. So you have to make it like that, okay? As I mentioned this morning. I apologize, I'm kind of repeating myself, but I know there's some of you that are watching this one and didn't watch this morning's. So we've seen some delivery, extend beyond the levels that I was looking for. And in this range in here, it's not able to get down through that. It's in the middle of the week, last week of September. We've covered a lot of ground, and this is a lot. 1, 2, 3, 4 weeks steady down. on indices. Like they got hammered. I don't see that as capitulation. I don't see that as the bottom. I don't think we're done going down. Okay. But I just want you to think in terms of when do we slow and pump the brakes about taking new shorts? In instances like this, we're in a deep discount. It doesn't mean I wouldn't take a short if it was really set up. It just means that you don't want to take heavy shorts. Don't do maximum leverage. Don't try to marry the idea that you're absolutely right, because these are times where we can start seeing wicked intraday reversals where it's just running on short-term buy side just to acquire new shorting positions by smart money and then another dump lower. We can get a lot of these reversals, but intraday. Not, and then we're looking at a weekly chart. Let me drop down to a daily. We can start seeing a lot of these types of candles here where we have wicks and tails on both sides of it. It can do that a lot in here, all in this range here, because we are at a deep discount and everybody is looking at the market that hasn't traded short. They're wanting to be short now. It's obvious to them that the market's been wanting to go down because it's already happened. That is the classic street money perspective. And that's why I'm trying to teach you as a student of me to look at the market in that way. From a sentiment standpoint, um, they like patterns. They like to be confirming something. They like to have confirmation that what they're expecting in terms of the market being bullish or bearish, it needs to be in the chart for them, or they won't trust it because they don't know what it's going to do next, because they don't know where the market's likely to be drawn to, whether it be liquidity above or below the marketplace or an inefficiency. And I'll give you an example.